Good morning, all. This is Nilesh Parab from IDBI Capital, and now it's 10:35. So I think we should start. And today with us, we have Mr. Bunty Chawla. He is AVP Banking and Finance Sector. He is tracking very minutely with us, and he is having more than 11 years of experience into research category. And today he is going to discuss with us LIC IPO, a game changer for the Indian capital market. So after the session, we will have a question and answer session. So till the time, sir, unmute you to ask the question. You just listen to him patientfully, and then we will discuss in detail your queries. I think, Bunty sir, are you able to start?
Yeah, thank you, Nilesh sir. Am I audible, Nilesh sir?
Yes, yes, yes.
Yeah, thank you, Nilesh sir. Good morning, team. Good morning, everyone who have joined. As we know, LIC, it's a name is very much familiar. I think so. Everyone who has joined, everybody knows some or the other way what is LIC. So we will talk slightly more on financials or more on a IPO perspective. As we know, it is a India's crown jewel, which we have named it as LIC. Now we will move slightly ahead. Now LIC in brief, we can say it is a one of provider of been providing for more than 65 years. It commands approximately 64% market share in terms of gross written premium and 66% market share in terms of new business premium. New business premium is a business premium the company collects during this year. The new joinees or new policies they have come into the picture. In terms of number of individual policies being issued in FY21, they command 74.5% market share. In terms of group policies, they command 81% market shares. And among in India, all total individual agents, 55% are with LIC. And it is considered as the fifth largest insurance player in the world. So this brief shows LIC is kind of a mammoth, or as it's a big institution, or if you can say in terms of it's a big elephant which should start moving as the IPO gets subscription and it get listed. And in terms of AUM size, it is the largest it is the largest asset manager in India with more than 39,000 crores of holding they have. And if I compare with the entire mutual fund industry, it is 1.2x of entire mutual fund industry in India with respect to asset management. So this is the kind of a brief LIC what is currently LIC is. We will move forward. So before LIC, what we will see life insurance industry, how in India the life insurance industry is all about. Its total companies are approximately 24 companies in India, but major contribution or major are the top 5 life insurance companies. Number one, as we are speaking about, is LIC, having a market share of 64%, and rest other private companies. And LIC is the only PSU companies in this insurance industry. Rest private holding 36% market share. And in this private also major are the 5 companies: SBI Life, 4 companies: HDFC Life, ICICI Prudential Life Insurance, Max Life Insurance. These are the top 5 life insurance companies which hold major more than 85% of the market share in the Indian industry as such. In this industry, if you see, there are more than 24 million agents. And in FY21, the total premium to GDP, which we try to compare with the GDP number, it's approximately 3.2%. If you see the number of policies sold, approximately 28 trillion number of policies sold in FY21. And as a household savings, which we save as a in terms of as a percentage of life insurance, it is approximately 15%. The data suggests as of FY20. The major number which we see over here is the 5-year CAGR business premium, which the growth these life insurance industry has seen, is 15.1%. What we will do, we will try to correlate with the GDP growth, or we will try to grow compare with the credit growth. Credit growth means banking industry loan growth. Banking industry loan growth has approximately grown at 7 to 8% kind of a thing in last 5 years. GDP is hovering around 6 to 8% kind of a thing. So it is growing much higher than the banking industry as well as the GDP growth. Now we will move. Now what are the factors which this life insurance credit life insurance growth is supporting them, or should support them in a future, in medium to long term perspective? First is the Indian sum assured to GDP ratio. If you try to say in a simple words, how much is the insurance penetration with respect to GDP with respect to other countries, it's still lower. It's comparatively lower. If you can see in the chart, India is approximately around 80% versus Singapore at 250% plus kind of a thing. Also, if we try to compare gross return premium with respect to GDP, it's hardly 3% kind of a thing. And according to Swiss RE report, which is the largest insurance in the world, they come out with the report. The India has a protection gap of approximately 85%, which is much lower. And what is the protection gap? It is measure of lack of financial services holds have to maintain in case of untimely demise of the primarily breadwinner. So what we have observed in this data as of FY19 is 3% approximately, and this has moved to 3.2% FY21 according to the CRISIL report industry data. And the CRISIL suggests, or CRISIL data says, that it should move to 3.6% as we go forward to FY23 and FY24. So these factors should support the overall insurance sector in India. Along with this, what we have observed, the financial assets, or you can say the savings of the household in terms of financial savings, could be in terms of gold, in terms of share market, in terms of mutual fund. All those things are included in the financial savings. The data suggests this percentage is continuously improving and going towards more and more towards 50% kind of a thing. As of FY20, the data suggests it's approximately 41%. So this also supports how the financial savings are moving ahead, and this will have a positive impact on the financial, which insurance is also a part of this. And second, in this slide, if you see, the middle India household is showing the witness a growth. Now what the CRISIL has suggested, or their estimates, is that 41 million Indian households in India will grow, which was FY12, will move by to 181 million by FY2030. This large number of households are likely to from semi-urban and rural assets. This consistent improvement in literacy, increasing access to information, or you can say cooking gas, toilets, and improvement in road infrastructure, which will all likely translate into the increased opportunity for financial service products. So ultimately, financial savings will improve and life insurance will be part of that. So this hold, or this supports the life insurance sector as a whole. Now we will move more specific to LIC, which we are focusing on. So we have roughly done a SWOT analysis. The SWOT analysis suggests the biggest strength. SWOT means strength, weakness, opportunity, and threat. The strength which the LIC has, it's the largest insurance company in India, dominating 75% market share in terms of new individual policy. So approximately 21 million. Also, they have the most productive agent network of selling 15.3 policies per agent. Now I will try to compare with the top 5 private players which we have seen. Their average is 1.6 policies sold per agent. So you can see the big strength which the LIC has in this perspective. Now coming to weakness, though we have seen there has been a good amount of in productive agent or high amount of individual agent, but there is the higher dependency on this individual agent for generating business, which is approximately 90%, 94% kind of a thing. So this dependency could be a weakness. Why? If you are not able to recruit new individual agents for the business for the growth perspective. Secondly, we have seen the cost of premium is high because of the individual agent commission kind of a thing. Also, there is a higher number of policy complaints, but we are seeing slowly that are coming down as well. Now coming on to the threat, if we as a the dependencies on the individual agent. So if there is some mis-selling happening from the individual agents, this could affect the persistency means you have a individual has started policy, now he has discontinued the policy, and now he will not come up with the continue with the LIC. So that will affect the persistency number for the LIC. Also, as we know, 100% holding is with the government, and now after the LIC IPO comes, 95% will be the government holding. So there could be a significant government influence on the LIC for any business activity as such. So this could be a threat we can see. Lastly, the opportunities in India is a huge. We know with the lower penetration, the FDI, there could be an increase in the FDI cap from to 74%. Also increase in the gross financial savings, which is expected to grow at 12% CAGR. These are the big opportunities for the LIC to grow going ahead. Now, as we have seen a SWOT analysis, some rationale which we believe the LIC has, being the LIC is the one of the major dominant player, as we have seen with respect to market share. Although on the new business premium, private players are slowly gaining the market share, but we believe LIC will remain the market leader in the insurance industry. In the second, in the lower chart, if you see, this is completely insurance industry is the oligopolistic market. Why? As we have seen, top four players are dominating 65%, and if we say top five players plus LIC, 85% plus kind of a market share. The oligopolistic has a good character of having a these five players, if they decide together to increase the pricing, then nobody can challenge, or the pricing will increase across the industry for them. So that oligopolistic uh, benefit these LIC or these market share players or the industry has. Now the biggest key or the biggest positive is the distribution which the LIC has, which because of which they have the market dominance. In the chart, if you can see, the LIC and SBI Life are the two who have the largest bank access through their distributor tie-ups. In terms of number of partners, LIC is the largest in terms of most number of partners. Why I'm saying the distribution is the key? What we have observed is the life insurance products are very much commoditized in nature, are very much commoditized in nature, and hence distribution is the only factor which leads to market dominance. And LIC has built unparalleled strength in this agency channel, which has helped to maintain its market share. And we are seeing LIC has the largest partner network. SBI Life is also having the largest bank access because of its parent SBI Bank. Further, what we have observed, the LIC being the strong presence, the data suggests they have a 72 bank insurance partner, 174 alternate channel, and the biggest thing is the dedicated portal for the company website for the digital sales. Now we know there is the mode, there is a change in the perception. Everybody is trying to move towards the digitization. So LIC is also trying to slowly move towards that. They have a 3463 active micro insurance agent and 4400 POS personal life insurance scheme. Currently, before the IPO has came, they are having a slight change in the business plan to boost the profitability. Now they are focusing to shift this business mix to non-participating policies. So currently they have only 4% of the total policies as a non-participating. They are trying to shift total they are trying to target to reach 10% of this overall business towards non-participating. Why I am saying this is positive or this is to boost the profitability? This structural shift will lead to potential margin expansion. They have a currently margin of 10% or 9.9%, and they are targeting to move 20%. Why I am saying this, this is more important. We will move ahead when we try to compare with the its peer group. We will see this margin is lower as compared to its peer. So this business plan change will try to increase the margin and ultimately the profitability. And the last on the least is the biggest they have is the most trusted brand in India is the LIC, and the largest investment in equity they have. They are recognized as the third strongest and the 10th most valuable global insurance brand as per the Insurance 100 2021 report. And what we have observed is they have approximately 9.7 lakh crore investment in equity. So this is approximately 1.1, 1.2 times or 18.5% of India's GDP. This was about the rational, but with the rational, with the business, with the institution or with the companies, there is always a risk factor comes into the picture. So we will highlight this risk factor. As we have seen, they are the largest equity holder. So if there is any downtick, or as we have seen during the month of March, April 2020, when the COVID impacted, there was a big impact on the equity markets. So there, this impact could have an adverse impact on the profitability for life insurance players. Also, this IR life insurance companies are regulated by IRDA. So any regulatory norms or regulatory changes by IRDA, any changes in the commission structure could have a impact on the pricing of the product and ultimately the profitability for these players. Significant government influence, as we have seen in the threat, the government holding should come down to 95%, but still it's a significant. There could be some influence on this as such. Too much dependency on agents, because your business more than 90% comes from the agents as such. And the natural calamity kind of situation, which will have too much of number of fatalities or higher number of claims, could result in the lower profitability. Now we will try to move towards more of the peer comparison. As we have seen, there are four large private players. We will try to compare their financials with the LIC as such. In terms of growth, if I see the FY21 growth, profitability has been good at 10% on a YOY basis versus SBI decline of 5% or HDFC 13% and ICICI. So overall, what we have observed, new premium business last 5 years growth has been for LIC around 13-14%, and for private players 17-18%. So overall 15% for the industry as such. The major focus is on the parameters or the financial ratios which we have observed. Now, if you see on the right hand side above, there is a chart which suggests VNB margins. This was the case which we were trying to focus when we said the business shift for increase in the profitability. If you see, the VNB margins for LIC are at 10%, for SBI HDFC is about 20% kind of a thing, because they have a major portfolio or higher percentage as the non-participating policies. So now LIC will be also try to focus on the more on the non-participating policy, where this VNB margin will will move towards the private players kind of a thing, 20% kind of a thing. So that should have a good amount of positivity or positive impact on the profitability. Also, if you can see the persistency ratio which we track for the all over the insurance industry, it's roughly in slightly lower but better. 60-65% has been suggested that it's seen as a better as compared to overall insurance industry in this as such. Now, this was about the LIC's rational risk factors and all those things. The major The reason which we are doing is the IPO is coming for in the next month. So what are the key features or the highlights for the IPO? It is purely an offer for sale. There is no money coming into the LIC. This is purely offer for sale. Government will have this money into its kitty. It's a 316.25 million equity shares will be are on offer, and it's total, if you see the 5% of the shares outstanding. So with this 100% stake for the government will move to 95% for this still. In this we are seeing that there is a reservation. 10% is purely reserved for the policy holders, 5% is for the employees. In detail, QIB portion not more than 50%, HNI 15%, and anchor not more than 34%. So this is all about the IPO highlights which will be coming in the month of March as such. In this main objective to come with the IPO is to get the benefit of the listing entity, and we have seen the listing entities are more transparent as compared to the unlisted entities. So the transparency will be improve, and they will get the more of the listing gains as such. Lastly, as we know, though DRHP has been filed, LSE IPO has been lined up, but nobody knows, or there is no declaration of the pricing. What will be the price for this IPO? So what we have done, we have tried to gauge the different valuation scenarios. Accordingly, what will be the pricing which will come into the picture for the IPO? Now you can see there is a range from 2x to 3.5x. Why I have taken this as a criteria? We have observed these top 5 private players which are listed have a price to EV valuation of around 2.3x to 3.3x kind of a thing. So we have taken that as a valuation parameter or as a benchmark for them. So we have taken 4 different scenarios. Two, if they come out with if they decide the market cap at 2x or 2x embedded value, then the market cap will be approximately 10.7 lakh crore, and the pricing will be around 1690 level kind of a thing, and this issue will be of around 53,000 crores. If next is 2.5x, slightly higher, then there is 13.4 lakh crore will be the market cap. Estimate price will be around 2100 range, and 66,000 crore will be the issue size. If they come out with a 3x, they decide for the 3x. Market cap will be approximately 16 lakh crore. Estimated share price will be approximately 2540, and issue size will be 80,000 crores. Lastly, 3.5x, 18.7 lakh crore, and 2970, 2960 will be the price with the 93,000 crores of the issue size kind of a thing. So thank you very much for the attention and quietly listening to it. Now over to you, Nilesh sir.
Hello.